Hello friends, welcome to Stock Mart channel. Here in this video, we're going to discuss about the company from the banking space, that is IDFC First Bank. In the year 1997, IDFC was formed to start project financing private structure infrastructure development in India. From 1997 to 2005, their core objective and focus was to project finance infrastructure development. In 2005, Mr. Rajiv Lal joined as chairman for IDFC Limited. Since he joined, he started to diversify the company's business into multiple business starting from IDFC mutual funds, IDFC capital market. He also brought in various reforms which played major role in growth in IDFC Limited. When RBI accepted to issue fresh applications for banking licenses in the year 2013, IDFC Limited applied for banking license. On 24th June 2015, RBI has officially issued banking license to IDFC Limited. On 1st of October 2015, IDFC Limited started banking operations. During that time, IDFC Bank was part of IDFC Limited. They have demerged and listed IDFC Bank on stock exchanges in the year 6th of November 2015. The person whom we are seeing right now, Mr. V. Vaidyanathan, is the brain behind the success and growth of this bank. He's having plenty of experience in the banking trade, especially in the retail division. His first stint is with Citibank, worked as a business head auto business for close to 9 years and 10 months, taking care of retail auto loans. He then moved on to ICICI Bank, worked as a country head, taking care of retail lending business for 2 years and 3 months. Then he moved as a country head, retail banking for 4 years and 6 months. Then he became executive director and board member during October 2006. Played key role in transformation from ICICI Bank domestic financial institution to universal bank. During this journey, he had started 1,411 branches in 800 cities, which he played major part role for the rapid growth for ICICI Bank. During this period, ICICI Bank has not only onboarded 25 million customers, but they have also acquired 1,35,000 crore retail loan book. During this phenomenal performance for growth of the company and his work ethics, he was promoted as executive director, retail banking, and board member during October 2006. During that time, ICICI Bank's chairman, Mr. K.V. Kamath, at the time of retirement, made Mrs. Chanda Kochar as the bank's MD and CEO as the successor, and Mr. Vaidyanathan has promoted as MD and CEO for ICICI Prudential Life Insurance Company. Mr. Vaidyanathan has spent almost 20 years in retail division. In the year 2010, he has bought Future Capital Company, which is an NBFC company, which was running at loss during that time, and changed the company's name to Capital First. Not only he changed the name of the company, but he had changed the future of the company. At the time of acquisition, the company declared 30 crore loss per year, but he made it profitable in the year 2018 with 330 crores. During the time of acquisition, Future Capital had lot of business verticals. He had closed all and focused mainly on increasing retail loan book and made it as a major business channel. During the time of acquisition, Capital First's asset under management was 935 crores during financial year 2010. And after merging with IDFC Bank, the asset under management increased to 32,622 crores, which is a phenomenal growth of 52% year on year CAGR. Not only he had increased the profitability and growth, he had built robust risk management which made Capital First's non-performing assets well within 1%. So after phenomenal success and growth, Mr. Vaidyanathan decided to further increase the profitability with the support of the bank. And it was then that in the year 2018, when Mr. Rajiv Lal from IDFC Bank and Mr. Vaidyanathan from Capital First decided to merge the company and named it as IDFC First Bank. And then Mr. Vaidyanathan was appointed as MD and CEO for IDFC First Bank. After taking charge as MD and CEO, Mr. Vaidyanathan found that the bank was struggling with infrastructure and wholesale loan book. just like how Capital First was struggling with their wholesale loan book initially. He then later promised the management that he will bring some reforms and ideology to increase the growth and profitability for the bank. They are mentioned as below. Growth of assets. At the time of merger, the IDFC Bank's retail loan assets was at rupees 36,236 crores as of 31st December 2018. And then he promised to grow over 1 lakh crore in the next 5 years. CASA growth. He promises strong CASA book and ratio percentage, which is current account and savings account. Then net interest margin to be more, followed by return on assets and return on equity to be improved on these parameters. And most importantly, the NPAs, the reduction in percentage of non-performing assets. If we have a glance of quarter one financial year 2024, the loans and advances increased 25% year on year to rupees 1,71,578 crores. Customer deposits increased to 44% year on year to rupees 1,48,474 crores. The core operating income increased 39% year on year to 5,086 crores. CASA ratio is at 46.5%, which is good. Generally, any bank's CASA ratio, which is more than 40 percentage, termed to be as good numbers. So overall, all these parameters looks very good for the banking perspective. If we look at quarter on quarter movement of key financial highlights of Q1 FY24 compared to Q4 FY23, these parameters looks like this. In terms of assets, the loans and advances has increased to 7 percentage. Deposits, the customer deposits has increased to 9 percentage. CASA ratio, which is still good, even though there is a less number that is very minute, but still it is 46.47, which is a good number. Gross NPA and net NPA has reduced, which is good to see. Provisions has increased. Again, it is good to see for a banking perspective. The profitability, profit after tax, that is PAT, has increased. ROA has increased. ROE is less, but not in a very less trend. So that is good to see. Again, the capital adequacy ratio is also good. So overall, the quarter on quarter movement looks very good. If we look at the year-on-year financial performance of Q1 FY24 versus Q1 FY 2023, the key parameters looks like this. Loans and advances, it's good to see that it is in an increasing trend to 25 percentage. Customer deposits increased to 44%, which is very good to see. CASA ratio is still good. Good to see that the gross NPA and net NPA is in a decreasing trend, not only at the bank level, also at retail, rural, and SMEs. And also, it is good to see that the provision coverage ratio of the bank is in an increasing trend. Companies PAT, that is profit after tax, is increased to 61 percentage, which is extremely good. Good to see that the return on asset and return on equity is in an increasing trend, and the capital adequacy ratio is also in an increasing trend. So this gives us a clear indication that the company has given a very good performance, and it keeps giving very good solid performance in the years to come by. The bank has developed a wide product suite of a universal bank. Retail lending solutions, that is home loans, vehicle loans, consumer loans, educational loans, personal loans, etc. SME lending solutions, that is loans against property, business banking, working capital loans, commercial working loans, etc. CASA and fixed deposits, that is current accounts, saving accounts, fixed deposits, etc. NRI banking, that is NRE accounts, NRO accounts, seafarer accounts, etc. Wealth management and distribution, that is wealth management distribution of life insurance, general insurance, credit shield, health insurance, mutual funds, etc. Followed by credit cards, fastags, trade finance, transaction banking and CMS, treasury and forex solutions, supply chain financing, corporate lending, that is working capital, demand loans, cash credit, term loans, corporate bonds, NCDs, etc. company is more focused on digital, as we all aware and agree with the fact that the growth is completely digital. Here we see that the RTGS and NEFT, the payment through CMS solutions up by 27% year on year. 95% of the overall transactions are digital, which is extremely good to hear. And 14.1 million plus FASTag issued since launch. And good to see that the growth of 72% year on year on credit card spends. 1.7 million plus credit cards has been issued since the launch in January 2021, which is extremely good to hear. Total customer deposits, that is retail deposits plus wholesale deposits put together, has grown strongly by 4-year CAGR of 36%, that is from March 19 to March 2023. The bank has 824 branches as of June 30, 2023. And if we see there is a performance of 44% increase of year on year deposits, that is from June 23 versus June 2022, and 10% increase in deposits on quarter, that is June 2023 versus March 2023. The CASA growth and percentage looks very solid. That is from March 2019 to March 2023. During the time of 4 years, it has given a very good performance of 74% CAGR, and it has increased 27% year on year from June 2023 versus June 2022, and 3% increase quarter on quarter from June 2023 versus March 2023. Presently for June 2023, the CASA ratio is at 46.5%. So the year on year ratio percentage looks very good and very promising. If you look at the overall customer deposits, it has increased rapidly from 27% during December 2018 to 77% presently at June 2023. The bank has diversified its loan book across more than 20 business lines. You can pause the video and look at each of the parameters. The provision coverage ratio increased to 83.12% for the bank. And if you see, the retail, rural and SME finance also shows rapid growth, and also at the bank level, it has given a significant performance of growth. Now comes the net interest income. If you see that from financial year 2019 to financial year 2023, there is a 27% CAGR when it comes to net interest income. That is extremely good to see. There is a consistent improvement in return on asset and return on equity. So both shows very good percentage and in an increasing trend. The shareholding pattern of the bank looks like this. Promoters holding 39.93%, whereas foreign institutional investors having 22.46%, domestic institutional investors having 7.72%, public is having 24.49%, President of India is holding 3.94%, other body corporates having 1.05%, trusts and clearing members having very marginal of 0.37%, and others in a negligible numbers. Now, this is very, very interesting to see. Here, the bank is saying what they're going to achieve and what would be their focus during financial year 2025. So they have given a guidance for FY24 and FY 2025. That is the capital adequacy to be at 13% and more, which is on track. CASA as a percentage of deposits, that is 30% at financial year 2024, thereafter 50%, which is on track. Branches estimating to be 800 to 900, which is presently at 824, which is on track. Liabilities also on track. Assets achieved on rural, retail and SME finance. Wholesale loans and advances as achieved. Percentage of infrastructure loans also on track. So that is extremely good to see these parameters. Also on gross net NPA and net NPA, which is on track. Provisions on track. Return on assets and return on equity is also on track, which is extremely good. If you look at the performance of revenue, it was at 15,968 crores during 2021 and presently at 22,727 crores, which is a very good numbers, and this keeps increasing year on year. That is good to see. The bank has given a profit of 483 crores during 2021 to 2,485 crores presently at 2023. And as years goes by, this is bound to increase as the company has got a very good potential to give a very good returns. Earning per share was at 0.88 during 2021 to 3.98 presently at 2023. If you look at the chart pattern of the bank, it has given a very good resistance and there is a breakout which is clearly showing, and with the kind of performance it has given and with the kind of results it has given, and surely it is bound to increase from here on. The bank has a track record of 12 years of maintaining gross NPA at less than 2% and net NPA of less than 1%. Bank is committed to investing in modern and adaptable technology to support its future growth. There is a steady increase of return on equity since merger in 2018, increasing from near zero to 10.95% in financial year 2023. In Q1 financial year 2024, the bank has posted PAT of rupees 765 crores. Bank has long-term credit rating which has been recently upgraded by CRISIL and ICRA. Highest level of corporate governance, stable balance sheet growth of 20 to 25%, robust asset quality of GNPA less than 2% and net NPA of 1%, and high levels of customer centricity augurs a very good performance for the bank going forward. So, what is your take about IDFC First Bank on its performance and future growth prospects? Do mention your comments on the chat box. And of course, these are not the stock recommendations and it is advised to do your analysis. So if you really like the content of this video, please do click like button and do subscribe for more such interesting videos in the future. Jai Hind.